Europe has been the unloved market, very much so. It's a consensus almost underweight, and US consensus overweight. So we believe that actually it's the right time to potentially, close some of those underweight positions and look at Europe. We see some upside risk, and most of it is actually China. Some relief coming out of China could be very helpful. And how to look at this, obviously, I would say we've just gone overweight luxury goods. That's a very nice way to play it. So there are some sectors that obviously are going to benefit within that. But broadly speaking, it's a general sentiment because obviously China, plays out in many different ways. In Europe, some cyclicality as well could be helpful. So we've got an overweight on luxury goods, but also an overweight on some cyclical spaces which could benefit.
When it comes to that kind of China maybe pain or overhang, could U.S. economic resilience make that up, especially when it comes to, say, the French luxury makers, for example, given that so much of the mass market story is in the States?
I think a lot of it, Kruti, right now is blurred by, the uncertainty around tariffs. So I'm afraid all of that potential positive that we see that's embedded in Europe that could happen, and all of that overflow that could come from let's say, soft landing in the US. Unfortunately, at the moment, investors are very much willing to see what happens to tariffs. Yeah. And, when they get implemented, are they laser focused on the sector? It could be luxury. It could be winemakers. But where is it going to happen? And I think, unfortunately, until we see some easing on that, but that's one of our positive cases, are we going to get negotiations rather than tariffs, etc.? That is the moment at which you start playing that. But
okay. Yes, and in terms of the timing then, so you think that Europe is undervalued, you think there's a lot of pessimism out there. We know that European stocks have rarely been this weak in relation to US peers, so relative underperformance has rarely been this bad. So what's the catalyst for that to change? I mean, you've mentioned something around tariffs, and maybe we get negotiation on tariffs. Are there other catalysts that we can look at then, Elise?
So I think the issue is there's not one silver bullet. It's actually a myriad of catalysts that we need to come together and almost like to come together at the same time. So I distinguish the fundamental ones and the I would call that the sort of political sentiment ones. So you've mentioned we're waiting for a prime minister in France. Now, that's not going to solve the French issue, right? We have political uncertainty in one market. We've got German elections. We think, German elections could be one nice catalyst. But the broad 5 catalysts that we see, one, probably a ceasefire or something better in Ukraine. And we don't hear much about that right now. We hear so much talk about tariffs. That's one thing. Tariffs, obviously, as soon as we get news that maybe one industry specifically is negotiating rather than going into tariffs, as soon as we get a view in January, for when actually some of the implementation might happen, that's going to ease some of the issues. And I would say that the third one really is China. And that's, some news coming out of that. I would mention one thing that I think market participants are not really looking at that I think is a huge tailwind for Europe and European markets, and it's basically the strong dollar. And I think the strong dollar is not something that's being featured at all or embedded into things because people are really looking at news flow and macro news flow.